Hello, Crypto Vince here. How's it going, guys? So I'm just gonna do a live stream today based on OMG chart because there's lots to see. We're just waiting for a few other people to connect. Hey, Jean, Mark, LeBlanc, hey, Luis. Stream should be healthy. Now I learned how to cut the first part so I can do whatever at the beginning of the video, then I will cut the first part directly on YouTube, which is something that I never done. How's it going, everybody? Hey, Daniel. See how the stream is going. The stream should be pretty good. 3-7. Okay. Well, 15 people. We can start to talk a little bit about this trade. So I just wanted to show you guys how to approach a trade. How I did approach this trade from the beginning. Why I thought to focus on OMG chart and which are the different entries that we could have found in the analysis, because there are many points where we could have made profit from this analysis. Again, everybody is different, so many people may have scalped Omisego. They may have bought low and hold. They may have daily trade, bought at the break, bought at the whole time low, bought at a retest. So there are really many points where we could have entered Omisego. So I want to go through what I did when I first saw Omisego chart. So this is of course the study after. I'm just gonna remove all indicators and drawing tools so we can see how to find something here. So as always, I like to analyze the weekly chart too sometimes, just to see what the coins overall is doing, right? And right away with Omisego, I can see that it's found a very great support here, and it's trying to turn to make a reversal, and that's for sure something that I look at, right? It's something that you wanna start to chart and see if you can find other indicators and pattern that can help you identify a possible pump or not. And Omisego, of course, is an amazing project, so it's worth to spend some time on it. Of course, I go on the daily too. The daily, of course, I like to analyze the candlestick patterns too. That helped me a lot. I don't like the candlestick pattern on the weekly too much, because crypto is very fast. So spending too much time on the weekly chart is not really relevant in my opinion. But the daily one can for sure tell you more. So I will start just to trade some horizontal line at this point, just to see how low we were, right? In this case, I can trace one either from the candle closed, and one either at the whole time low of the correction. Sometimes, if I just want to have even a better understanding of the chart, I would even trace an overall Fibonacci just to see what's going on. I'm charting, by the way, in logarithmic scale because the linear scale changes a lot. So I like the logarithmic way better. In this case, the Fibonacci traced just from all-time low to all-time high is not really telling me too much. I don't think 88 probably. It's about no. Well, 88.6. It's a Fibonacci. Sorry, yeah, it's a Fibonacci that we can find in harmonic patterns. So I like to put in the chart. Sometimes my help, but the most important Fibonacci that we're gonna talk today is the 70.70, which is something that is working all the time in the altcoin chart lately, and it's bouncing this. The trend is bouncing on the 70.70 many times. So that's something I will talk about in this live stream. Okay. So let's leave this Fibonacci, just of course this Fibonacci that trace would have been better to use just for this correction, because then we had another bullish run and the trend pretty much correct all the way down to all-time low of the correction here. So we bounced pretty good there. So because of that, I already jump on the chart and see, oh wow, I can buy Omisego on very low right now. I don't think it might go lower than this point. We have even some support here. As you can see, this is the Bittrex chart. I use Bittrex, of course, because it has more history than Binance. And what I would do, I just go look closer now and start to add some indicators. Of course, volume is probably the main one that we want to analyze at this point in the market, because coins are starting to build up volume, and I mean, volume can of course identify pump and dump, can identify interest in the coin, can tell many things. But if we see here, volume has been spiking a lot. The average is pretty much natural. It doesn't really tell me too much, but there are many spikes here. Look how big was the volume on those spikes, and the candles were really not, the price was not really pumping on those massive spike here. Look at this one here. So this might, this might indicate people accumulating. The trend is horizontal here, going sideways, trying to break this horizontal line made from the Fibonacci, but I was for sure trace other Fibonacci here, another horizontal support and resistance in order to be more accurate. But sometimes the Fibonacci that I trace really helped me to see the bounces sometimes, and I just trace the Fibonacci, and that will give me automatically horizontal support and resistances without me tracing them. So what I did here, I started to trace some diagonal resistance and support by connecting the main highs of this part of the trend. So what I noticed, this one right here. So this resistance here, and then I connected the lows too. See if I could see any pattern. This was a pretty good falling wedge pattern that comes from a downtrend, though. Just this. You can trace how many trends line you wish to have a better idea. Of course, when I publish my my analysis, I try to be as clear as possible, so I don't like confuse you guys too much. But I could trace way more trend lines to be more accurate. In this case, we have this support that it's a good one, but just 2 touches. This one has more, 1, 2, 3, 4. So that's why this entry probably would have been a great entry at this point, because there is two touches already. So this touch here kind of confirmed this support quite good, the red support right there. and I can even adjust or trace other resistances just to see, you know, how the trend is going, where it's breaking. I don't like to cut into the wicks too much. Sometimes I do, like for example the blue line, I can kind of adjust this like this. In this case, this would be a false breakout almost, and we still have some resistances here, right? So it's still a good one. I don't really have a, a precise precise methodology, because sometimes, you know, you just have to see the trend, the average of it, and how it's doing. Things cannot really be as precise as we want it to be, right? So in this case, if I trace this one and then I trace maybe another one there, or I can trace from here, I have an idea. Of course, it's a falling wedge and it's bouncing many times in this falling wedge. So I was waiting for a break of this pattern or to buy a support. So where we can buy OMG based on the 1-day chart, and why was it a great buy at this low support? Well, we have seen it. I mean, the volume's not telling us too much. I mean, there are many spikes that can kind of tell us that people are interested in the coin, and there are many spikes, and people might be accumulating OMG. By trading some, let me remove this Fibonacci here. Tracing some horizontal resistances and support. I would trade, of course, this one. Like that. This is a good one. 2 touch, 3, 2, and I keep tracing resistances as I see them. Probably the most important ones, not everything. Otherwise, then it's gonna be messy here. I have some lows. Look how many times the trend touches here. 1, 2, 3. So for me, that's a great resistance and support. We have a good bounce here, so that's another one. So by tracing those horizontal resistance, I have already an idea what possible targets might be, right? And you know, this is probably what I would do. Actually, there is another one here that's the most important one. Right there. There is some bounce here. This is just, you know, a false breakout of this all-time low. And remember, this is probably the most important one, which comes from the beginning of the chart. And this was the candle closed on the weekly, I think. Go check here on the daily too. The candle close of the daily. So a bounce could have happened at this level. Now, removing volume, so we don't get too confused, let's remove this one. So we say that this was a great bounce, possible bounce, touches in coincidence with the support here. So this area for me could have been a very great buying opportunity. And now let's go check some indicators, because indicators are other tools that might help strengthen your analysis. And volume is, of course, is one indicator. I use MACD too, RSI. Let's see what they're telling me here. Actually, I got mine already made, so I don't have to scroll around with. Let's see, let's move that. Okay. So MACD. Well, MACD was coming from a very low point. That comes from here already. So the price has been dropping, as of course happening correction pattern. This could have been a massive correction while the indicator was going upward. So there is some kind of divergence of MACD and RSI here, as you can see. The indicator was going up slowly, MACD too, starting from a very bottom, and the price correcting. So that could have lead to a bullish sentiment, a bullish prediction too. By looking at the daily on MACD and RSI, they don't really tell me to buy at this point. Really, not too much, because MACD is crossing. My MACD is a moving average, so it always delays. So it's not really telling me to buy right there. RSI too is pretty flat. And the WT cross, it gives me the signals right after. So not right on the support here, but 2 candles 2 days after. I have this bullish cross of WT cross and the candle yellow that could have been a buy signal there. So this is what I see from MACD RSI on the daily. Let's go check on 4 hours, or even on a smaller time frame, because you know, when I make my analysis, of course, in the daily, then I start to go back and I go 4 hour, 2 hour, 1 hour, 30 minutes to see if I can find my best entry. 4 hours is my best option, my favorite option, sorry. And as you can see here, right there, let me remove MACD. There was a massive RSI bullish divergence at this point. So I'm doing this live, so I didn't really put any content list on anything, so I'm just thinking as I go. If I'm a bit slow, that's normal. Let me put it, what color? Pink. Okay, so we have a bullish divergence on RSI. Look how oversold was RSI, and hasn't been this oversold about 14 levels since here. So this was a pretty good signal. Not here, but actually here, because there is the divergence, right? So sometimes you have to wait. When you see RSI going very deep, doesn't mean that's the perfect buy, because the divergence might happen, and the perfect buy, it's when the price drops below this low too. So we have another information here that tell us to buy divergence on an RSI. We have a double touch on WT cross, which is another indicator that helps me to buy a coin. MACD is not really, it was not really telling me too much. So what else can I see in this chart? Let's see 1 hour just to check it. What happened at that point? Still see some kind of a divergence there. Maybe in the 1 hour it might be too far to study, but you guys can still see the idea. MACD. Yeah, MACD on the 1 hour present another divergence too, right there, very low and then high. So the indicators are making higher lows, and the price is making a lower low. So that's a bullish divergence right there. So if you buy on the second low, that's when it pumps, right? So So I'm trying to see other things. So on the daily, another indicator that helps me a lot, especially in this market where everything is really fucked up at the moment. So coins do whatever they want, and TA, it's kind of hard in this market because sometimes coins pump for no reason, or many coins pump at the same time. So it's hard. It's hard for us to see which one's gonna pump. It's not easy. That's why we trade many coins at the same time, and that doesn't mean we fucking post 1 million coins and then we claim, hey, we did this, we did that. All our analysis are studied really well, and if the analysis gets stopped out, that's part of the trade. And actually, to be honest, I think we get stopped out on Omisego, and I'm gonna present you guys why we did stopped out. But of course, the study was totally presented, so if you know how to trade, you would probably get in Omisego again. Because if you get stopped out, that doesn't mean the trade is shit. That means maybe we put a stop loss too close, and the trade can bounce again and be bullish again. So when you get stopped out on a trade, don't panic and say, oh fuck it, this is not a great call. Just focus on finding another entry, because sometimes, especially those coins that we study on the daily chart, can be very profitable. And we can make some mistakes by putting stop loss very tight. Why? Because well, the market is so shit right now that we have to protect our capital. So that's why we put stop loss very tight sometimes. But at the same time, we put stop loss tight because the risk reward are of course more, they're bigger risk reward if we put a stop loss tight. Okay. Okay, so what I was saying here, some other indicators. Well, the Bollinger Bands, it's a huge indicator. Many traders trade the Bollinger Band itself when it gets above the bands and below the bands, as you can see here. And on the daily chart is helping me a lot to find what coins really I should really focus on in this market, because I chart fucking 1,000 coins a day and sometimes, you know, I get lost. So I'm trying to figure it out which is the best way in this market to find the coin that I should focus on, because when market changes, even your strategy will change. But in this point in the market, I think Bollinger Band on the daily chart can really help a lot to tell us a good entry. And this example, this is perfect example. This could be a perfect. Oh, let me remove the magnet. This could be a perfect entry for a short trade. And then you could have sold here, of course. You could have sold here when it was above the bands. Here almost reached, but it was not a great buy. Look at here how low was below the band. That's another massive opportunity of a entry there. It's almost at all-time low. Remember, all-time low is right here on the pink line. And then again, this was a nice dump. We could have bought there, or of course the best entry possible was at this point at the divergence right there. Remember all those candles though, then you can make an analysis of the candles too. I like to do the analysis on the candles here and there in the daily and in the 4-hour chart. I don't like to see candles too much on 1 hour or lower time frame, because I mean, yeah, if I'm scalping something, okay, I'm there, I'm focused on the chart, I spend like an hour to scalp that coin, and yes, I focus on the candles. But right now we can see those candles here. Those candles here have a small body and a very long wick below. They have a wick above and below, so I won't call them hammer. Let's remember the candles can be very similar to each other. We have the doji, we have the morning star, we have the hammer, and this one probably can be a hammer because the body closes here. There is a wick just below, and this can be a very bullish candles if we find on the at the bottom of a trend. This one is almost a hammer, but it has 2 wicks above and below, so probably this is what's called a long lower shadow. That's how it's called, and this can of course trigger another little bullish pattern here. This one, it's a double spin top because there's the bodies in the center. We have 2 wicks up and down, and that one too at the bottom of a trend can trigger a bullish run. As you can see, 3 different candles here: a long lower shadow, a double spin top, and a bullish hammer. That all of them trigger some kind of a bullish trend. Now of course we failed here, and we had here what, double spin top here. Anyways, you guys can check in the daily, you guys can check in the 4 hours to see what you guys got. Here there is a long lower shadow. That's the one, you know, the best buy that we could have caught at the bottom of the support here. Okay, so many things that could have tell us to buy Omisego. Again, here it's out of the Bollinger Bands too, so that's another good example of how you could use Bollinger Bands in order to enter a trade. This was the other entry, and of course this is the exit based on Bollinger Bands, and based on actually not too much because we couldn't really trace this red line, but based on the blue, maybe you could have sold because it was approaching the resistance there, right? Okay, so we got the candlestick idea, and then what happened? Then the trend reached the resistance. He got rejected first time here on the red resistance, and then dropped again. Then he went again, touched the resistance, then it definitely broke. Okay, but look, Bollinger Bands. The Bollinger Bands are here, right? So in this case, the Bollinger Bands were inside the falling wedge. So in that case, we reach above the Bollinger Band. That could have been a selling point. In this case, not though, because the Bollinger Band is way above the falling wedge, right? So in this case, the trend could have break and reached the top maybe of the Bollinger Bands. Anyways, what happened? The trend arrived there, stopped, and dropped all the way to this point right here, right? So if you bought it here, let's see how much profit. And that we could approach this entry. Well, if you place a buy right on the all-time low, if you bought a little bit above it, I will spot the stop loss just right below support. And depends, you know, how you wanna enter this trade. Let's see. Of course, if I put it here, that's very. I can make a few examples here. If you caught this with a buy limit just on that point, you know, that's pretty lucky. Waiting for the divergence, that could have been with a stop loss of 2% and a profit of 20, that could have been a risk reward of 7. So if you invest 1% of your portfolio, sorry, if you risked 1% of your portfolio as a stop loss, you would have made 7% of your total portfolio increase. Okay, but if I would have bought at this level here when the Bollinger Bands dropped, and maybe, you know, for me this was still a great buy, I would have put a stop loss probably below the candle body of the one-day chart here, right? This was the lowest support. and still I would have made a greater risk reward. It was 1 to 3 risk reward, so still great. So what happened there? So let's say you took this trade, you made your profit, you sell at some point here because it touched a resistance here. This was a good resistance. Why? Because there were all these low here. So look how many times this trend touches here and gets rejected. Even here, candle closed at this level. Just one time the trend made it, and then again we have many touch. So this resistance for me, it's a very strong one, right there. Of course, can be a zone, and it doesn't have to be a precise value, and we are actually right on that level right now, trying to break this resistance at the moment. So this is a strong resistance right there. Boom. So you sell there. What happened? What happened in this trade? Let's make things a little bit more clear. Bollinger Bands, let's remove them. Okay, right there. So we have the falling wedge, our important falling wedge that broke here. And what we wait for in those situations, when the trend breaks, we wait for some retest of the broken resistance, because this resistance was broken right here, touch the resistance, and usually the trend drops. You guys don't really want to buy a break. This can be a danger entry, but if you really want to FOMO into coins, that's another option you got. Buy years at stop loss very close. But again, for example, here you could have bought it right on this break, as you guys can see here, and then there are people that manipulate the order book to hit your stop loss, and that's probably happened here. People bought it, set up a stop loss right below, and the whales see that and they're like, oh, you know what, I'm gonna go hit that stop loss because I can make money. Boom, boom, the coin drops, and then it goes again. So you should never buy directly on a break, but you should wait for maybe a second break or the retest, which is probably the most important one. This could be a nice retest. Of course, this line that we trace again is not that precise, so you have to consider that when you trade. The things cannot hit lines as you draw, because those lines is something that you trace, and is not an indicator that is there that everybody follows. So everybody might trace this line in a different way. I can trace like this, there is another guy is tracing like that, so people will base that their trade and their buy based on the line they put. But what's another reason why this trend actually bounced here? Let's see. I want to trace some Fibonacci because I like my Fibonacci a lot. So first of all, I trace an inverted Fibonacci of this bearish trend to see this bounce here. So there will be the 100% will be on top of this, and so the retracement of this bearish trend. So it's a bullish retracement, right? So I want to see how much this bearish trend is actually correcting upward, and as you guys can see, it correct right here. Actually closed on 61, but it bounced right on our magic 70.70 Fibonacci retracement. Okay, that's a bounce that I'm seeing many times, and we are tracing it. Okay, we are charting it all over again. So I've seen that. So this is a reason why you could have sold here if you bought at this level. And now the trend is correct, and so I want to find a new entry, right? So let's trace a new Fibonacci. And I'm the best guy to spell, sorry, to pronounce Fibonacci because I'm Italian. Okay, so a Fibonacci that we could have traced from the all-time low to the top here, and by magic, look what happens. Where the trend bounced, 70.70. Wow, that's another entry right there. And I think that was the mistake I did when I charted this coin. I did a little mistake. Which was my mistake? Let me remember. I think I counted this as a bounce. Where is it? I counted 61% as a bounce, and I saw these things was going up, and then it dropped, right? And in this case, of course, if you put this entry, depends how much you want to put your stop loss at. You might got hit or not, right? So in this case, if you put an entry here for a risk reward of 4.5, actually, you would have made a good trade if you put a stop loss just below 70, right? But in this case, I think I preferred to put a stop loss just right below 61. Why? Because I saw this low here. Okay, so based on that, I see, well, it bounced here, maybe it's gonna go right now. And then I put a stop loss right here to have a very great risk reward in this case. If I would have nailed this trade, I would have made a 10 reward. That means my total portfolio would have increased by 10%. Okay, if I would have risked 1%. Well, the stop loss get hit. Of course, this trade doesn't mean this trade is shit. So all the study that I did into the garbage doesn't mean that. Of course, I can re-enter the trade with a new stop loss, and in that case would have been very profitable. I would have not put a stop loss right below 70. Why? Because I see some support here, some lows here. So if I would have put a stop loss right here, well, I rather put just below there because the lows are here, right? So I would never put a stop loss right there because those lows. So I would put right there. In that case, would still be a great opportunity, or up to where you reached right now. It's a 3 reward. Okay. So many ideas, many things you guys can figure out when you do your trades. It all depends what kind of traders you are. If you're scalping, if you're short term, if you're long, how much time can you spend in front of the chart? Because if I want to buy, let me say go to buy for a long term, I'm not gonna put this sure stop loss because I may get hit. Let's see if I don't have time. I want to buy. I don't see the coins anymore. Well, probably I put the stop loss 7% down and I go for the long run right here below the all-time low, pretty much. So different ways you can approach a trade, and that's why sometimes for us it's not as easy to tell you, hey, listen, buy here, sell here, because we don't know what the fuck you gotta do. how you think, how much money you got, what kind of trade mentality you have, what strategy you got. Like, we can present the trade and tells you, hey, we are doing like this and we are doing like that. If we get stopped out, we re-enter the trade. But more than that, I mean, we cannot do. It's just impossible to enter in every one single mind. Anyways, the perfect bounce on 70.70, that would have been probably the best trade, the best entry there. What could have been another entry, if you wanna be more risky, actually not more risky, this probably would have been the less risky one if you put a stop loss right there, but breaking this channel, this is a little channel that it was making, almost a bull flag, and buy at the break. Again, we don't suggest buying the break. You see this week here, this week's probably could have been the other entry you could have waited for, and so on. So many opportunities, as you can see, it's breaking actually right now. The candles, this resistance. So probably next target will be here. Well, this high is. Look at the volume, is building up a lot. This is what, 4-hour chart. Let's check indicators. Let me put my indicators. Yeah, the Bollinger Bands. The trend is going above the Bollinger Bands, so I don't know how long it's gonna last there. RSI is getting overbought, sorry. MACD is still a way to go, MACD actually. Let's check the daily to see how the candles are doing. Well, on the daily we have Ichimoku Cloud with the crypto settings that it's huge, but it's not really important at this point, because all the coins are really destroyed. This massive Ichimoku Cloud on the 1-day chart. They're going into it. Probably the 12 chart will be more will be a better indicator. Maybe there is already some green. You guys can see here the trend is trying to break Ichimoku Cloud. It didn't break here. Look at this. It didn't break here. It didn't break here. It didn't break here. Look how many times it got rejected by the Ichimoku Cloud on the exact point of the Bollinger Bands. So those are all indicators that you guys can use as a selling point. See? And now it's actually going into the cloud. And the next target by the 12-hour chart, look how flat the Ichimoku Cloud is here. Right there. So that will be my second target after reaching this main resistance. Okay? So this is how I analyze coins, and this requires times. That's why it's fucking crazy. You guys think this is easy? Like, you know, people complain sometimes. Oh, you didn't post this, you didn't post that. Why you didn't tell this? Why you didn't tell that? Like, some people really want to get spooned, don't appreciate all the work that we do. Like, this is insane to do with every fucking coin. So imagine that. Imagine that the work we do, our team does. So keep that in mind. This was a call that was provided in premium, and an analysis that was provided in premium. And you know, if you, our goal is to teach you how to become a more successful trader, not to feed you with signals. Even though we provide analysis every day, we even have our amazing bot that is helping us to help you guys give a better way to see our analysis. But again, the trick to be successful in trading is make your own decision at the end. That's what we think is the most important part of it. Anyways, what is making here? It's making a flat top too, so that's another pattern. So we try to look at many indicators at the same time. We look at volume, we look at MACD, RSI, Bollinger Bands, Ichimoku Cloud, resistance, support, price action, candlestick pattern. So everything together will give you the best prediction. Sometimes though, if you use many indicators at the same time, you might not ever enter a trade, because you always will have that indicator will tell you, oh, no, it's not a good buy. So sometimes you need to simplify your trade in order to to have the, let's say, the balls to enter. Because remember, there is no trade that will have 100% chances to be a good one. There's always a risk. That's why we call it risk reward. In every single trade you do, there's always a risk. A trade that will be 100% profitable does not exist. You can go and the best trader in the world and pay how much money you want. There won't be a 100% chance trade to go in. It's impossible, especially in cryptocurrency. With all the manipulation that we got and the small market cap of the coins, like everything can happen. So anyways, the flat top that I see, it's of course this one right here. Let me remove that here. I'll connect this candle here, probably. And this could be a pretty good resistance right there, because the trend is trying to break. Boom, boom, boom. Got rejected a few times, so this is the break. Okay, but you could have even traced the top wicks here, and it's still breaking. So flat top triangle in this situation, breaking. Where we can reach? Well, of course, flat part of the Ichimoku Cloud right now can be a pretty good target right now, for sure. Can be a good one. Sorry, I like to say for sure as an English word, but I don't really mean like for sure it's gonna reach it. I mean for sure is a great target, because some people might really get confused. Anyways, extension of the correction traced with the normal Fibonacci tool. You guys can see extension on 100% right there. So that's the target, and then I have my way to trace it, and I'm not gonna show on this live because I showed many times. Anyways, let's be careful, because we really didn't close above the resistance yet. This is on 12 hours, 8 hours, not really. 4 hours, no. So yeah, I would be careful here, because we didn't really close above the resistance, so we didn't officially break. And what that means that the symmetrical triangle might actually be another option. If we don't break here, the trend might drop and go touch the support here, and then bounce back again to then break, definitely. So that's why I was looking at this symmetrical triangle pattern. Let's check indicators. Sometimes you really don't know. You just gotta see. Members sometimes ask me, will it break? Will it break? Well, I don't know. I'm not God to see if it's gonna break or not. You just gotta study the order book maybe. But again, the order book is over manipulated, so you might really get confused there. So until you see a candle that closes, that could be already a better indicator that it might keep going up. But there exists false breakout where the candle closes above and then the trend drops. So in order to be safe, you just gotta play with stop losses. That's all you gotta do. That's it. That's the way to trade. Place stop loss in your single trade, use position size. You know how much you're risking, and if you get stopped out, it's fine. If I get stopped out here, I buy lower. That's not a big problem. 1 hour indicators, by the way, are pretty high. Not really telling me to sell already, but they're pretty high. 4 hour chart 2. Anyways, this is how I identify the trade. Been talking for an hour already. Wow. So what I wanted to show you here, it's how I approach a trade from scratch, if you guys allow me to say that, and how I use a mix of indicators, tools, Fibonacci, and everything in order to really enter in the best spot possible. Remember, the 70% Fibonacci, it's a great one, but remember, it's tricky. Why it's tricky? Because you need to know where to place that Fibonacci. In this case, in this situation, let me see. This situation, it works perfect because I trace that from here, and I trace from the top, so from the low to the high, and I almost bounce perfect. But most of the time, I skip that big wick and I go really to main support. And in that case, the Fibonacci, the wicks drops to 88. So you need some experience and practice in order to find that 70-70. So don't start now to buy everything at 70-70, because I showed you that I have another million indicators in order to enter this coin at that bounce, not just because there was 70-70. And the perfect example is PHX that I called in premium. Again, this comes from my own practice, from my own experience on cryptocurrency. Sometimes when I see a massive wick, I don't like to trace my Fibonacci from the top, because you guys don't see, I don't see any bounces. For me, it's invalid. So most of the time I drop it to the second one. When to do this? Good luck. It just, sometimes you feel it. Sometimes it just come from experience, I guess, from practice to do Fibonacci every single time, and you say, okay, you know what, this looks like it's gonna go here. And you know, the trend bounced pretty good on 70-70, had a 20% spike, and now we'll see if it's gonna keep going or not. It made almost a bullish engulfing here. So this candle is totally engulfed the body of this one. It would have been better if it would have engulfed even the wick of this candle to be even more bullish, but it didn't. So we'll see how this red pulse goes. Anyways, OMG tracks. And that's it. Is it see, I was starting on Bittrex, yeah. And yeah, we'll see what's gonna happen if he breaks this level. Again, I'm bullish up to here, and then if he breaks even this level, bye bye. And he's making a nice reversal here, nice sideways. But it can for sure drop more to let people accumulate even more if this thing is gonna be very bullish. We have another block too here. Oop. This zone here that might actually be a nice liquidation area for shorts and sell. So the trend is actually reaching this order block and dropping every time, and right now it's not really dropping. So if we break this one, I'm bullish above it. Target right there. If we break, I like to be precise with it. I'm perfectionist. When I chart my shit, they have to be the right color, the right thickness. don't know if it's bad or not. If we don't break here, we probably go down here. And down where we can trace a Fibonacci maybe. And drop probably to 61. Or 50 we drop here, no? Buy here, you buy here, you put a very tight stop loss. You want to put it below 70, you know, just in case. Because remember, sometimes, you know, you put a stop loss very tight because you think, oh, it's not gonna break it, but there are always sometimes that wick that will screw you. So sometimes you better want to go a little bit lower. This is 1%, so you're in a good situation there. But I'm saying if you want to reach, let's say, this level again, if you want to buy at the support, let's see, look how the risk reward changes dramatically. So if I put a stop loss really tight, I have a risk reward of 10. If I drop it just a little bit below, it drops to 4. So I rather get stopped out and then re-enter with this massive risk reward instead of just putting a stop loss very low and aim for what? 2? That's not a really good trade that I want to do. Okay? No, sorry guys, I'm not gonna chart any other coins. I'll post ICX on the channel. Otherwise, I'm never gonna stop here. Alright guys, I hope it was helpful, and you know, remember to like those videos if you want to support me. Thank you so much. Follow us on Telegram, Twitter, YouTube. We are everywhere. If you guys want to join our premium, the registration are still open. We're doing a great job teaching people and provide good signals that we call analysis, and we like, of course, to educate everybody the best way to trade. Of course, the risk reward is our main strategy, position size, and then, you know, we work a lot psychologically too, controlling the emotion. That's for sure another good things to learn. Because remember, when you're full of greed, you want to get rich in a day, that's not gonna help. If you're scared, that's another reason not to enter the trade. And if you're going all in and you're scared that the coin is gonna drop, you might not make the right decisions when you enter the trade. So you have to know how much you're willing to lose, and just with that mentality, you are gonna be able to behold the coin that is just correcting, and it might go up again. Okay. Do you have a video on resistance and support? Well, I made a video on premium. I think it was like 2 hours long, where I explain all the beginning of how to approach a chart. So it's like a 2-hour long video that explain everything, and support and resistance is explained there. And the video contains everything. It was like about, actually it was 3 hour long, I think. But there are many little videos that you might find in YouTube. I don't think there is one specifically for stop loss and resistance. But okay guys, it's about 1 hour. Thank you so much. And I will talk to you guys soon. Thank you so much. Have a good day. Bye bye.